What are the most profitable Forex pairs to trade? Well, let's look at the most traded Forex currency pair, and that is the Euro SD. Now, the Euro SD has high volatility and good liquidity. So high volatility means it's a good opportunity to make profits because the price goes up and down a lot. And the liquidity, good liquidity means that the spread that you pay, which is basically a charge you pay to the broker to trade, is much lower. So you're saving money on opening the trade, and also you've got the opportunity to make good profits with this particular pair. So that's Euro SD. Another popular pair is the Pound US, known as the cable. And I'm based in the UK, so it's an ideal pair for me to trade. It's also one of the most volatile. So, for example, the price can go up or down more than 100 points in a day. So, even though it's one of the most popular, should I say, it's probably not the best for beginners to start with. For example, I have traded in the past and I've had my fingers burnt, so I tend to stay clear of it now. As I say, it's really good volatility in it, which means you can get those big profits but also big losses. And obviously the liquidity is good, so the spread that you pay is really good. So it's very popular in the UK to obviously trade this currency and in the US. And any currency pair that involves the US dollar, which is the world's currency, and it's the most traded currency, then there's always going to be good volatility most of the time uh, to get a profit. Um, so we look at we also got the US Japan. If I show the US Japan, so the US Japan as well is another popular currency pair, US Japanese yen, the Aussie US, which I'm currently in on the trade at the moment. So I'm just going long on that at the moment. Aussie US, like many currencies, is affected by the fundamentals. Fundamentals being things like interest rates of the country, inflation, general economic policies of the country, things like commodities, exports. And for example, the Australian US dollar is very much affected by the commodity price, specifically of gold. Australia mine and export a lot of gold, so that affects this pair quite a lot. We got Euro Japan, so the euro being another big currency against Japanese yen, Euro pound. US Canadian dollar, this is another one really affected by fundamentals. So, for example, use US dollar against Canadian dollar. Um, Canadian dollar is very much affected by the exports of Canada. So Canada very much relies on its oil exports, and this highly affects this pair, US and Canadian dollar. We got the US and the Swiss franc. So the Swiss franc, a lot of traders go towards the Swiss franc in times of market uncertainty. It's seen as a safe haven. Uh, Euro Swiss franc as well. Um, so that's the Swiss franc again, euro against Swiss franc. And then we've got the US dollar basket. So the US dollar basket is the US dollar trading against a basket of currencies. And these basket of currencies include things like the pound, the euro, the Japanese yen, the Swiss franc, Swiss krona. Um, so I don't tend not to trade the US dollar basket, but what I do look at the US dollar basket for is an indication of how strong or weak the dollar is. As you can see, since February, the US dollar has been going down against this basket of currencies. So it's a good indicator rather than to trade it itself. And then we've got the pound euro. Um, so these are all here, as you can see, listed in my particular broker, are the major currencies which I would stick to, especially when you're first starting out. Maybe avoid the pound US because I say there's quite a bit of high volatility. But you could look at things like obviously the Euro US, the Aussie US, which I'm currently in, and US Canadian, US Swiss. There's plenty for you to trade, and you don't need to be trading, a lot of currency pairs. You could just trade one currency pair, and the reason for this is because some currency pairs are actually correlated. What I mean by correlated is that they go in the same direction. So if you look at the pound US, now this is the pound US, and you can see the pound on this chart here on the right, the pound's going up. If you look at the euro US, And you'll see the euro's also going up against the US, although it's coming down slightly now. So they're going in the same direction. We look at the next two. So you've got the euro US, comes up on the chart. Here we are. So the euro US, that's going up. And the Aussie US that I'm in at the moment, the Aussie's going up. So you might say, well, why didn't I take out the trade on the euro US as well? Well, I could have done. Obviously, I'd also have to pay, put forward funds for my margin on that as well, and obviously the cost of the spread. But more importantly, yes, if they're both winning, I can make a lot of money. But if they're both losing, I might, lose double the amount that I expected to lose. So you've got to look at risk management as well as, the point of, well, look, I could be getting almost double the amount of winnings. You've got to be careful. So let's look at the other one. So we got US Swiss franc, and so there's US Swiss franc. So US is coming down against the Swiss franc, and then we got the US Japan up here, and US is going the same way, big time going down against Japan. So they're going in the same direction as well. So they're ones that are correlated, so they move together. So you've got to think about if you're taking more than one trade out, is it going to be moving in the same direction, or is it going to be moving in the opposite direction? So for example, we've got pairs that will move in the opposite direction. So this is the euro US, so the euro is going up against the US, and then if we look at the US Swiss, the US going down. So you could go long on one and short on the other. So for example, pound US, you could go long on the pound US, and then US Japan, you could go short because you see it's going down. So you can hedge your bets. US Canadian, so US Canadian is coming down here, and then if we look at the Aussie US, it's going up. So you go long on one, short on the other. US Japan, if we look at the US Japan, and then we look at the so US Japan is going down, and if you look at the Aussie US, Aussie's going up. So you go in the opposite directions there as well. And pound US, pound is going up against the US, and the US Swiss, US is going down. So you trade one long and one short. So if you're going to open more than one currency pair when you're trading, just be careful. Are they going in the same direction or not? Are they correlated? Now, there are various resources you can find out to tell, if a pair are correlated or not. I mean, obviously, one of the easiest ways is to look at the chart. So the euro USD, euro is going up against the US dollar, pound against the US dollar, it's going up against the US dollar. So clearly they're going in the same direction. So it's also one of the easiest ways to do it. So there's about, I don't know, about maybe 10 major currencies here listed, currency pairs listed in my broker here. So I would stick to those. And remember, all of these different currency pairs have their own characteristics. And for example, maybe if you're day trading, the high volatility would suit the pound US, because you're trading in and out on the same day. So you want to make a lot of money in that day. So if it's moving 100 points now, you can make a lot of money in the day. You're not having wide stops, or rather you could be having wide stops, but you're going to close within that day. So you're either going to make a lot of money, or you cut your losses really quick. So, but if you're a swing trader and you're holding over several days in that, then your stops would have to be quite wide, because if it's going to go over maybe 100 points a day, then you've got to have that stop way over that 100-point mark, and you've got to have a big account to allow for that. Whereas a small account, you can't do that. So maybe you would have to day trade rather than hold it over night for a day or two. Whether you're swing trading, trend trading, or holding it for months. Each trade is different depending on your trading plan, and you'll get to find out which currency would suit you best. But I would certainly steer clear of these minor currencies here, because even though we've got the big currencies here, you've got pound and yen, which are big currencies in their own right, traders aren't trading these as much. So the volume's not there, volatility's not there, liquidity's not there. I mean, and here we've got 18903, sell, buy 18,923. So you're looking at 20 pips. Okay, it's the weekend market for my particular broker, so the spread is going to be higher. But even during the week, it's still going to be high. So it's costing you. So you already are into quite a big loss before you move into any profit. If it goes the other way against you, losing even more. And then you got the get my teeth in the I can't say the Australian market. So continent of Australia and Asia, Scandinavian, and the exotics. Now, I'm sure maybe, some people do make money on the exotics and the emerging markets, but you have to know what you're doing, and I certainly wouldn't advise it, especially if you're a beginner. Um, so yeah, so going back to where we started, it was the USD, which is the most traded currency. And as I said, there's no one straight answer to which pair is going to be most profitable for you. It depends on your account size, on your style of trading, on your particular trading plan, what you're hoping to achieve, and it depends on what type of trading you're going to be doing, whether you're day trading, whether you're going to be swing trading, also what time zone you're in as well. I'm in the UK, but all markets have their peaks and troughs depending whether you're operating in the Asian session, the European session. The currencies tend to reflect the time zones that they're based in. And especially if you're day trading, you obviously want to trade at the times when these currencies are at their peak to maximize your profits. So, there are a lot of factors to consider. So I don't think there's one outright winner on which is the most profitable pair to trade. They all have their own characteristics. I mean, I guess all of the majors can be profitable. I wouldn't say there's a clear winner. You have to find one which suits you and your style of trading. And the most popular ones like the pound and US, Euro US, even though they're a couple of the most traded, might not be the most profitable for you. Might be one of the other majors. For example, I'm in the Aussie US at the moment. My last trade won on that, and I've just gone long on that now. And that's been profitable for me. So has the US Swiss, and they're quite stable currencies to trade and to get in and out of. And maybe that would suit you better than the volatility of the pound and US. So there is no straight answer to it. You have to find the pair that suits you and your style of trading. But certainly, my last bit of advice to you would be to stick to these major currencies and trade those. And hopefully, I say hopefully, if you've got a good trading plan and you stick to it and you stick to these majors, hopefully, fingers crossed, you'll come out on top. Thank you very much.